Hello traders, Gary Wagner here, approximately 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, 8th day of March, 2021, and this is the daily report for gold and silver. There are other investment vehicles that are obviously in direct competition with gold. That has pressured it lower, specifically U.S. Treasury yields, the 10-year note has an interest rate now return of about 1.6% compared to 1.5 last week and much, much lower a previous month. That, along with the really incredible ascent of Bitcoin, gaining about 30% over the last 30 days in trading. And finally, a strong U.S. equities market. Those are in direct competition to gold as a safe haven asset, and therefore we have seen continued pressure taking gold prices lower. Today dropping approximately $20, but we'll talk about that along with the other asset classes that we spoke about by looking at charts in our technical studies, which begins now. Gold continues to lose value as other asset classes have increased in value, offering market participants an alternative to the safe haven asset. We'll look at those investment vehicles when we pull up our charts, but gold is currently fixed at $1,679.10. This, of course, is the April 2021 COMEX contract. That's down $19.50 today, a decline of 1.15%. While there are other asset classes that are vying for those investment dollars, one strong factor has been dollar strength. The U.S. dollar index gained almost a full 0.5%, 0.48 to be exact, and is currently fixed at 92.43.5. And these alternative investment vehicles, as we mentioned in our opening letter, such as the Dow Jones Industrial Average, higher yield in U.S. Treasury notes, and the cryptocurrency Bitcoin, have stolen the thunder away from gold. We can see that when we look at this daily chart of the Dow. On an intraday basis, we definitely got an all-time new high. On a closing basis, we are very close from the highs that were witnessed approximately a week and a half ago in trading. And add to that the phenomenal rise in value that we have seen in Bitcoin, significant rises since the end of January when a single Bitcoin was trading at roughly $30,000 per coin to current valuation at $52,220. This, of course, being the CME's Bitcoin futures contract. And you can see this rise here. That's our all-time high in Bitcoin futures at 57,784. The market then came back down and tested the 0.78% Fibonacci retracement. It did find support. It had a couple of lows that came in below that, but for the most part, you can see that this was an area of support and now has moved to about the middle of the trading range between 57 and 45,000. The other market contributing to this recent decline in gold has been dollar strength. We are looking at the dollar index as being a daily candlestick chart. We can easily see the gains in value that occurred from the end of February right here when the dollar index was trading at approximately 89.70 and is now well above 92 and a half, which means that we've seen in excess of a 3% rise in the last 8 days of trading. Truly a significant rise. Now, the rise that we saw on Friday, coupled with today's, takes it over this resistance area. We can see resistance right here at 91.60, and the next real resistance level does not come in until the dollar index has another 0.5% to go at 92.57. The only precious metal to gain value today was platinum futures, gaining $13.10. That's a net increase of 1.16% and is currently fixed at $1,141.40. Concurrently, silver lost about 0.4%, almost 11 cents in total, and is currently fixed at $25.18. We're looking at a daily candlestick chart of platinum futures, and a couple of things strike out at me. The first is when we look at our Fibonacci retracement, this from March to the middle of February when market forces took platinum futures up to $1,348. That was the last rally we have seen. We have seen well over 3 weeks of solid declines. Currently, we're at $1,141. And the one thing is, even with today's respectable gains, when we blow this up, you will see it closed right at the 50-day moving average, although on a intraday basis, we did track above that. It was unable to sustain those gains and close right at that price point. We put our first level of resistance at $1,141. That, of course, is the 50-day moving average, with major resistance at $1,100 and call it $64, the 23% Fibonacci retracement. Traders, for right now, we remain bearish to neutral, although I underscore the word bearish in gold. Silver, we are more cautiously optimistic, although that could still track under some pressure. We believe that because the tech sector has been trading a little bit lower, and that's been under pressure last week as well as in trading today, and that's where you have a high utilization of silver for solar panels. The same cannot be said for platinum and palladium, which are really highly used in catalytic converters and the automobile industry. So the fact that platinum has shown some gains, we did see a decline in palladium, but I would remain more bullish long-term with the potential for a key reversal in platinum because of that fact. However, until we see an effective close first above the 50-day, and I really would like to see a close above 23.6% fib retracement before I get exceedingly bullish, but a move above these two price points would trigger a buy signal. The other thing, and the last thing that I will talk about platinum futures, is we have a full bullish alignment with the 200-day below the 100-day, which is below the 50-day, and that's what you'll see in a market that is moving to higher ground. The fact of the matter is that platinum futures have not broken below the 50-day moving average up until trading last week, this being Thursday's trading activity, this candle here. And we really have to go back in time. We'll go ahead and compress the chart to see when that wasn't the case. And that comes in at approximately the end of December 2020. And we can see this very extended and exaggerated low that came into the market, even though none of the bodies actually broke that. And in that case, we have to go back really to November, the middle of November of last year. And that's the last time we really saw tracking and trading under these moving averages. It actually broke through the 200 very briefly, but it was tracking well below the 50 as well as the 100-day in the last months of 2020. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.